Yet another crisis. Many of you probably have thought when Israel sent its bombs to Iran in mid-June. The market reacted relatively calmly to this as there were other crises put in the background. We have not talked about US tariffs, we have not talked about the Ukrainian war or the domestic situation in the US anymore. And apart from surge in oil prices, this war in the Middle East had little impact. With the ceasefire that was coming after the US forcefully intervened in this crisis, we have seen markets going back to normal again. Now, this was yet another crisis in this very turbulent first half of the year. Remember, at the end of 2024, we said 25 will be a year of political stress test. And we have seen many of those political stress in the first half of the year. Nevertheless, the markets reacted overall relatively relaxed to all of this. We have seen historical highs in both the US and the European stock markets. And current readings are just a bit below those record highs. Now, going forward, what will the second half of the year bring? We have still lots of open questions, starting again with tariffs. At the 9th of July, there is the end of the pause of the 90-day period of the reciprocal tariffs from the US to the rest of the world. So that will raise again this issue, what will really happen there. And also the pause of the exceptionally high tariffs between the US and China will end in August. So another source of uncertainty. And on top of this, there will be the big, beautiful bill. This triple B is targeted to be finalized in July or August. And this probably will raise again the anxiety of the market participants regarding the debt sustainability in the US. And overall, there's also the question about the defense policy in Europe. We have seen a pretty successful summit of the NATO, and they all committed to spend more on defense. 3.5% for pure defense and 1.5% of GDP for defense infrastructure. So this is good at the first point, but the big question will be, how will this be funded? And this will be particularly an issue in Europe. And there will be more summits to come in Europe where they figure out how this is be funded. And we think this debate will go to mutualizing of debt. So question of Eurobonds or something like this is likely to come up again. And that might be in the end good for Europe, as it is seen as a sign of unity, but the way there might be choppy. But nevertheless, what's happening in Europe, it's important, but the focus will be again in the second half on President Trump. If this ceasefire in the Middle East holds, he will regard this as a success of his very forceful politics. And that means that in other areas, domestically and on foreign policy, he will be even more radical in his ventures to go through. We have learned that the markets do not really like these radical moves. And therefore, there might be further negative reactions of the market to this. And looking backward again, the first half of the year, we have seen that if the market really raises its head and shows its power, even a US president is bending and bowing to this.